Hello everyone, this is Teddy Keckstedt with Forex Trading Unlocked, a market analysis techniques video today. I want to welcome you to our episode. We want to have our disclaimer pulled up real quick just to take care of a quick little business, a little house cleaning. Alright, so here we have our disclaimer just to remind you that this video is for educational purposes only. There is no intention here to try and coax you into one trade or another. But this is just for educational purposes. And don't forget to also, after the video, check out forex-trading-unlock.com. Alright, now let's go to our first chart here. We have the dollar index up here, and we're going to go to the monthly time frame and see how things are going. So we have overall the market has been trending lower over the course of the last year and a half, as you can see, and then over the past definitely 6 months we've been basically in a sideways chop. So on the monthly chart there's really not much to go on there as far as direction or even on levels. But here we have the daily chart, and that's a totally different story. So we've been in a downward correction over as we headed from the last quarter into the first quarter of this year. And as we headed right into the holidays, we bottomed out. And then here we have, as we got into the new year and the first full trading week of the year, we have broken out to the upside. So now the trend is back in the bull's hands. You can see that it's pretty steep. We had a nice little rally on Friday also, pressing new move highs, and we have some key levels here right now. So right now we settled above the 98.70 area. That's a key level in the dollar index, as well as this 99.019. So basically 98.70 to 99 even. This area here is a nice pocket of resistance, and you can see that the market had stalled here before it bottomed out here. It has acted as both support and resistance. I'm going to go with the most likely odds are that right now we're going to have it go in the into a pausing mode. I would think that maybe we might spike a little higher Sunday night into Monday's trade. I would not get too married to longs though as far as the dollar is concerned. I think you're going to see probably a slowdown in some of your major pairs. You may see a little bit more action in some of your lesser pairs when it comes to dollar strength, but I believe that will be subsiding on Monday. Now, one thing you can always make sure to do is to use market tools. You go to our Forex Trading Unlocked workstation page, and we have our calendar pulled up here. So as far as what do we have to look forward to as far as numbers are concerned, we do have on January 13th core CPI. That's going to be a big deal for the dollar as well as for interest rates. Interest rates are a function of currency pricing, so that's going to be a big deal. And then also on the 14th we have retail sales and existing home sales. These are numbers here that I think I would expect that for existing home sales, that number to increase. Retail sales, since we're coming out of the holidays, I'm going to assume that they probably are going to hit the expected number, maybe even beat expectations a little bit. We'll see how that works. So as far as numbers, until the 13th and 14th, we really don't have anything to gyrate the dollar. Another reason why I think you're probably going to run out of gas on Monday or Tuesday, or excuse me, Sunday into Monday. All right, let's go look at the Euro US dollar here. The euro being the biggest weight in the dollar index, you can see this has fallen into some key support also. This is right here at 116, basically 116.40 down to 115.97. So basically 116 even to 116.40. This, as you can see, is a consolidation range. You have a lot of lows right around this area here, as well as a lot of highs right around this line here at 116.40 basically. So right here, I think you're going to, just as the dollar index is going to spike most likely, you're going to probably see the Euro US dollar maybe touch off a new low Sunday into Monday, and then probably bottom out and then start to rebound and digest recent weakness. Especially with the Fed meeting coming up and the likelihood of a rate cut, it's more likely that the Euro US dollar is going to be steady to higher then it is likely to be probing support, just because of the fundamental outlook that we're going to see another rate cut possibly at this next meeting or sometime before Powell does leave office and the Fed chairmanship is transferred over to whoever the new candidate will be. Right now there's a few candidates. There is one gentleman that seems to be kind of in the forefront. There's also a woman that's also in the heat also, but right now it seems like he has the lead. Anything can happen between now and then, though, so we still have a few months away. So right now, let's take a look at this. So as far as where can we rally back up to, a good area here I would say is this 116.91, upwards of 117.12 in this area right in here. Probably, since we have this downward sloping resistance line, if it was to happen sometime between Sunday and Monday, I would believe that you're going to definitely see a lot of resistance here at 116.90. After that case, once we hit in the middle of the week, I think we'll, just by attrition, we're going to move through this downward sloping trend line. So we should have I wouldn't say a large breakout to the upside, but I do believe we'll see higher move highs. Like I said, trend up into this 117.12 area. 117.38 here, I think, is probably going to be your extreme for any rally this week, at least before the numbers come out. Once we have those numbers, especially the core CPI and the retail sales, those two numbers may accelerate the rally for the euro US dollar. It could also slam it back towards the lows. I believe volatility is going to be the call for this week when you get later into the week. So just kind of look at it that way, that you're probably going to have a free range swing trade situation from Sunday night into the number on the 17th. Or excuse me, on the 13th, excuse me. So, and once we hit the 13th, that first number, if it stirs up the interest rate market, like the 30-year and the 10-year, that should get the dollar swinging, and then that means we'll definitely have some volatility. So maybe be cautious around the time of those releases. Maybe if you're not in the market, you might want to wait until after the numbers are released and digest at least for a little bit before you start to really get involved with that number. All right, so let's see what we got here. We do have one thing to look at. Let's look at the monthly chart before we leave the euro. So this overall had been trending lower, obviously, for a very long time. We broke out last year to the upside, but we've been going sideways just like the dollar index has been going sideways for months. I do believe that that period is going to end. I think you're going to most likely see, it's very likely that you could see the euro US dollar get up to probably the 125 to 130 area sometime this year, later on, I would say come summertime. If you're planning on going to Europe, I would say right now would be a good time to start buying your euros, because you're probably going to end up paying upwards of a dime more per mark or per euro versus the dollar if you wait until the summertime. Just saying, that's a very good possibility, especially because if we have just one rate cut by Powell, and then if the new Fed chairman cuts right away in May when they first come into office, which will be their first opportunity to cut rates, you're probably going to see, like I said, the euro up at least in the 120 or lower 120 areas. And if we get two cuts with it, and with an expectation of yet another cut by the new chairman, I think you're really going to have a good chance at seeing the euro US dollar trading up around 125, probably by mid-June to mid-July in that area. So definitely within the next 6 months from now, you could see a good $9 move. So that's a good trend move. So we're actually in a nice buying area as well for a long-term position trade. So something to take into account, especially if we can get a good leg on a rally going into the Fed meeting, and then all of a sudden if Powell does cut rates at the January meeting, that should fuel at least a rally above this high currently right here. So we're going to put this as our post. Let's make this, we'll make this dashed, and we'll turn it to a black line here, and we're going to write this is going to be our post Fed meeting target. All right, so right here, this high, can we take it out? Absolutely. It's very likely, though, once we do hit up in this area, you'll have a little bit of consolidation, perhaps even a nice 1 to 2 point pullback before it makes another challenge of this area. Once again, I believe that as we head into the Fed meeting, we should get up to this 117 area, and then after that, probably poke it a little bit higher and then start reaching up towards this post-Fed meeting target area. So we'll see how that works out. And by the way, for any of you that are joining in here, if you have any questions, we do have one here, XAU, USD, and BTC, please. All right, well, we'll go to that one. Why don't we do that? We've already covered the Euro. Why don't we go to the cryptos real quick? BTC, USD. All right, my friend, here we are. Let's go to the monthly first, do a little breakdown. So overall, we have a nice rally, obviously, that's been going on in Bitcoin. We know that as the year ended, it didn't do so hot. Definitely, as far as performing on the year in 2025, as an asset class, if you were holding Bitcoin versus other assets, you didn't do as well. Silver being the biggest performing asset class of 2025. All right, so this here kind of it's an interesting chart formation here. It's very similar to one in the currency market, but let's take a look at where we're at here. So we have up towards here, this high here of 126, where we've been. I know everybody with this long it wishes it was back up there. And then we have this 80,000. So what do we have going on here? Well, we have a very interesting chart pattern possibly forming here. So as we have been trending higher, it looks like we've had a nice little corrective move to the downside that ended here in November. And then here we have December and January. We're hovering. Looks like we're going to get a little rally. I believe that's probably a good chance that we could do that, but be careful because we have a potential head and shoulders forming. Here is a potential shoulder, and then we have, obviously, this would make it the head up here. And the question is are we going to rally into another shoulder and then fail? Well, that's a really good question. I think that with the consolidation, especially in metals going on right now, and we're going to cover XAU USD for our guest here who asked for it, and after we get to Bitcoin, see what kind of relevancy they two have towards each other. Right now, I think you have a really good chance of still getting Bitcoin up to probably around this 98 level. Let's do a little Fibonacci here from this high to this low and see where we can go. A good range would be, we'll go to the 50% mark. We'll make this yellow. Let's make it solid. And probably up to here. Okay, so if, let's just hypothetically say that we are in a head and shoulders pattern that is forming. Okay, this hasn't formed yet. If it does, that means, wow, we're going to, oh, no problem, man, you're very welcome. So if this is going to be a long-term sell pattern, there's a good chance that we're going to go like this, probably. We're going to trade up a little bit like this, maybe come up into this area, and then the question is, do we come through here and fail, or do we come through up into this area here, bobble around, and then come up and make new highs? So that's a good question, right? So I would say most likely what we're going to see is a rally into this area here around 103, 103,000 up to 109,000, somewhere in this area. You can see how this had been resistance, and then it had been support, and then it failed. So this, I would believe, is still going to be the same type of buffer line that you have to watch out for. So anyhow, for this one here, we're looking at over the daily basis, a trade up into there. Since you're trading, okay, that was the monthly basis, excuse me. So now on the daily basis, let's see where we're at here. So with this, we've had a nice little rounded out bottom here, as you can see. And we're flirting with this little area right here, and I believe that if we can challenge and get a nice little sustained trade above this 94,000, once again, we have a good shot at rallying back up to the 103 to 109. Is that going to happen over the next course of a couple of days? Probably not. I would say it's going to take every bit of, let's get through the Fed meeting, and then after the Fed meeting, I could see what's getting up into here as we approach into February, kind of like on this kind of a progression here. Okay, so if you want to look at it as a timeline, we're probably not going to cross the this high right here until probably the last week of January, which would be after the Fed meeting. All right, so let's see. You want to know about standard deviation fibs at these and BTC. Well, you got a lot of questions, man. So let's stick with the breakdown analysis here. So we got the Bitcoin. Let's go to the gold. This is a market that, I'll tell you what, it is overcooked for sure. That doesn't mean that it's not going to keep on rallying, though, for right now. I have to say, it's kind of crazy. Gold just continues to pound through highs. Now, here's something I want you guys to really take into account if you're trading gold, even if you're just investing in it too. Gold is a phenomenal hedge against inflation. Obviously, with the inflation that we had over the last 4 years, you can see what it did to the price of gold. I mean, we started out in 2020, gold was at $1,400 over, actually 2020, let's see, July 19, December 2020. Yeah, so we were right here, right around $1,500 an ounce back then, and now look at where we're at. It's quite the difference here. I'm just trying to clean up this chart. All right. Sorry, guys, we got a whole bunch of stuff on this chart from last year. All right, so here we have the monthly. We're up at 4,500. Stretching the high last month was 4,550. Can we take that out? Well, it looks like we're going to try sometime, I would say, probably within the next week or so. Now, remember, we're heading into a Fed meeting. There we go. So this is kind of volatile here, the way it's acted over the holidays going into the first of the year here. Quite the action, though. I have to say, we had a good trending bounce here. This here was a good profit-taking move here. This was on December 29th. This was right at the end of the year. Obviously, I would say this move here was probably year-end profit-taking for funds and stuff like that. They unloaded profits and then now probably ducked in and started buying back in. Now, remember, we had this high here. So be careful. If we take out this low here, this market is due for a correction, and for it to go from where it's trading at 4,500 back down to 4,000, 3,900 area is very, very, very likely. One of the things that that scares me about this rally, I don't know if you're trading this on a daily basis. You trade. Oh, you trade gold every day, scalping. Okay, well that's good. If you're probably going to see a lot of downside action. There's usually a lot of money made on the downside for sure, especially when you're overdone like this. What I would pay attention to, since you're trading the gold, is the futures, and look at and watch the open interest in the futures also, because that will give you probably an indication of how much the funds are still speculating with gold, and that's one of the things that really scares me. Futures is my background. I've seen bubbles before. This gold, what we have going on here, it's not sustainable. I mean, gold could go to 10,000, but doesn't mean it can't go to 10,000 and back down to 1,000. Gold is not a scarce metal by any means. The cost of production is one of probably the biggest driving forces that has been hurting, especially silver and gold, because of some of the states where you do mine, especially in the United States, impose all kinds of ecological conditions that with the Green New Deal vestige from Biden that really has restricted these industries. You can't be mining gold out of the ground with electric cars and electric trucks and electric bulldozers and stuff like that. So the restrictions they put on the diesel equipment and things like that has driven up costs, as well as slowed production, to where it's kind of funny where the miners are complaining that the price of the metals needs to stay high just for them to make it affordable for them to mine. Well, I think that those restrictions and a lot of those things are now changing with the new administration. They're getting rid of a lot of those, especially the EPA things that are completely unnecessary and stupid. I mean, you can't have construction vehicles and things that are necessary for the economy running on just electricity. It's not even, I mean, it's a pipe dream. It just doesn't work. So, but anyhow, that being said, I like this where it's at. I think you have a good chance at maybe flirting with the top this week. I'd be careful though, as we head into the Fed meeting, it's very likely that we're going to go sideways. If you look at it here, this is right around here when we had the last Fed meeting, and we went sideways, and it was a very tight trade. So don't be surprised if you're a gold trader on a daily basis that you're going to see your stuff really tighten up. Let's see, CME made expensive for futures for gold positions. I am seeing less volume every day. There you go. I'm glad that you made that comment, and that you do check out the futures. That right there is an indication that there's a good chance that there's going to be a good correction in gold. So when the volume starts to drop like that, and especially when you're at these highs, like I said, very good chance that you're going to have that kind of a move. So gold is what you wanted to look at, and BTC. So now we're going to go and check out the British pound, US dollar, to see how that's influencing the dollar index too. So the second biggest weight in the dollar index is the pound. You can see that this made a lower move low right here. It took out this last one here from this rally that we've been going on here. So now we have a higher move high and a lower move low. That means not necessarily are we going to head into a bear market. It does mean that we are most likely going to head into a digestive phase, and at least a short-term, somewhat of a corrective phase for this currency. So that kind of goes in line with our retraction of the dollar, which we were talking about as we head into this Fed meeting. And that would probably mean that if the pound is going to test support anymore, this 133.58 is probably going to be the extreme of a slide. Okay, so right now we don't want to say that this market's in a bear market, or even starting a bearish correction either. I think what you have here is a profit-taking slide that's about to end, and then at least go into a sideways to higher trade as we head into the Fed meeting. Once again, you have the bullish fundamental with the rate cut coming. Odds are pretty good that it's going to give a bounce to the pound US dollar. So this 133.58, if we settle below this, then that means we might have an over-exacerbated correction that could get down to 132.89, so basically around 133 even. Then we start to have this monthly trend line come in here. So, I mean, the odds of us getting down to this 132 area are very, very bleak, especially since you have a lot of support that comes, a lot of lows that come in this area here above the 132.90 area. So like I said, I think we could possibly test new lows Sunday into Monday, and then we get a little bit of a reversal, and then we should have a sideways trade to higher. Okay, then we're going to take a look at the US dollar CHF. And for this one here, this is looks like we have a nice rally going on, but if you look at the numbers here, 78.80 to 81 even up here, that is not a very big range. This looks like a big range only because it's been trading in such a small range for the last 5 months. Very tight trade in the Swiss. Overall, this market is a bear, even though it doesn't look like it here. It's if anything, I would be very careful with longs, looking for rallies to sell, especially like this one. I think you've got a good chance of maybe, like I said, getting a continuing dollar strength as we head into the beginning of the new week, and then we should fade out by Monday and the Tuesday. So I think, let's see, 80.23 here. Probably a good chance of spiking above this area up in here, stalling, maybe even settling in this area. I do not believe we can hit this 80.67 before the Fed meeting. Odds are really, really good that it's going to start to run out of gas and consolidate. As far as where could we go by the Fed meeting and as the end of the month is concerned, I think that we should test the 79.40 area right here down to 79.20. If we fail from this area, well, then all bets are off, and then I believe that the monthly trend line here this time will be tested and also taken out. Very good chance at us running out of gas for the bulls and having the bears start to at least inch the trend lower, if you will. All right, so now we come to one of our biggest fun trade setups for the year. See this rally here in the US dollar yen? Well, that's something that I think is going to run out of gas. We are stretching this rally. There is a gap to be filled down here. I would venture to say that sometime before summertime this gap is filled, if not sometime over the next 2 months. Right now, I believe we're going to challenge these highs by just a little bit. This 159.19 right here, which basically is 159 even, should put a ceiling on a higher trending US dollar yen. For the main reason is with the rate cuts expected, and then also with crude in a sideways to lower trending market, that should, without a doubt, pull us back to this 155 area here, 155.82 to 155.26. And then I think probably chop around here for a little bit, maybe ride this trend line, and then boom. As we head into February, into March, we should be back at this 153 area to 152, which puts us in a very good corrective area for just this rally that we've had. And then it becomes decision time. If the outlook on the fundamentals remain with a rate cut bias, which is where we believe things are going to be, it should continue lower into the second quarter and into the summer, get us down to this 150 area, which is the benchmark for where the BOJ wants the US dollar yen relationship. They want it at 150 or lower. If we get down to this area here, well, then we're right above this gap. So we should, like I said, if fundamentals, if crude continues to trade lower, let's say crude can sustain a trade below $52 or even $50 a barrel, if we can trade in the upper 40s for any extended amount of time, while we also have, let's say we do get the rate cut with Powell this month, with an expectation of yet even another one with him before he leaves the office, that should give us, there's no reason in the world why we shouldn't get down to this US dollar this gap here in the US dollar Japanese yen. All right, so good targets long term. We like this trade. I expect a lot of swing trades in this one. All right, Australian dollar, US dollar. We have a nice little rally that peaked this week with a higher move high. We have not made a lower move low. This is a key chart pattern that's forming here. We have been riding this trend line, and now we're starting to look like either we could be having a head and shoulders forming, maybe we get a little rally and then it collapses into this area here, or we just keep on railing. With the Fed meeting coming up, I believe that we're probably going to stay within these two dashed lines here at 67.66 to 66.59, which is not a big, it's a $1 range. It's not a very big range to be playing around with. So I would wait for a breakout. One of the main reasons is, let's just say hypothetically we don't take out this low Monday and we end up settling higher. That would be a very good indication that we're going to try and challenge, or at least stay digestive in this range, or challenge these highs before the month is out. If we fail here now on Monday or Tuesday into this area, well, then that's a different story. We probably will press this correction down to the 66.36 area, maybe even down here to 66.59. Then we have this nice monthly trend line here in this area. So if we started trading down into here, it's very likely that you'll find support and a bounce there. Now we do have a little different situation here in the New Zealand dollar, US dollar. We've already had a head and shoulder touched off, confirmed, and we have a sell signal generated on Friday with this close below this neckline. We'd already touched this 57.18 area. My guess is we'll get down to 56.85 and probably 56.40 before the month is out. And then you can see here we had some consolidation and found decent support. So in this area, you'll probably see that bounce occur sometime, I would say, over the next month, if you will. And then we have the US dollar Canada. Now this one, you want to talk about an explosive move on Friday. Most of the action in the currencies was definitely in the Canada. So we exploded above our target here of 138.89. Now we've closed in this area. Now this is about where we come into highs and a lot of lows. So this is a tricky little spot. I think what's going to happen is, like, once again, I think the dollar is going to pull back and start to go sideways into the meeting. So if that's the case, it probably should, this high is probably secure. I would use this as your directional bias here, this high, and look at it like this. If we close above, and see, here's the thing is we have this downward sloping monthly trend line coming in here, heavy resistance at 139.52. But if we can close above here, then we get above this pocket here where we have these highs and lows bouncing around. Another key area, if we're close above this line, its monthly trend line, that's a good indication that we are, this currency, no matter what, is going to continue to remain in a bullish phase. There is one thing that I have to say is my biggest call for the year, and I think the dollar index will be very hard to use as a gauge as we move forward in over the next 6 to 12 months of 2026. Divergence. I believe that you're going to see a lot of divergence no matter what is happening with the dollar. Obviously, the interest rate differential is putting a bias towards a weakening dollar as we head into the new year, or as we head throughout the year of 2026. And unless there's a big change in Fed direction, which between the pressure from the White House and just on so many other levels, I can't imagine that the Fed would start to go towards a hawkish bias, at the very least not until fourth quarter of 2026. So there shouldn't be any tone like that. And normally you would think that that would make this a weak relationship for US dollar Canada, but the Canadian economy is collapsing, so there's multiple reasons why you're probably going to see US dollar strength versus the Canadian dollar, especially as their currency is probably likely going to have suffer a lot of weakness versus many currencies across the globe, predominantly with the US dollar and the EU and even the yen. So we'll watch how that goes over the course of the year. I could be totally wrong, but right now fundamentals look very bleak at best. At best, they look bleak for Canada, and especially with the leadership that they have running their country right now. So let's go back to the dollar index on a close. One last look. As you can see, like I said, this hits the tone with the dollar probably running out of gas this week as we head into the Fed meeting. We'll see how things pan out, and you guys have a good week ahead, and make sure you subscribe and like, and also share our videos with your friends and help us out in spreading the Forex Trading Unlocked presence around the globe. Thank you very much. You guys have a wonderful rest